Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 19th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. I do the same thing in these daily market commentaries, but I go a bit further for you guys and talk about option strategies that we could implement in and around our market assumptions. It's not just going out there and picking an option strategy out of the hat. It doesn't work that way. We have some guidelines here at Pro Trader Strategies that we teach you guys in order to find the optimal strategy for your market assumptions. So without further ado, let's get on with the economic data across the let's talk about yesterday. I was obviously on TD Ameritrade and was having all kinds of issues the past 2 days. Yesterday I wasn't even able to get on until like 12:30, so the entire day was basically behind me, and that's 12:30 Eastern, which is 3:30 Eastern and 12:30 Western. So I just was catching it at the very end of the day, so I didn't do anything. So you guys didn't really miss out on anything. So we will talk about what I did miss out on yesterday here in a little bit. But let's talk about yesterday's economic data. We got building permits and housing starts here in the United States, and that continues to be better, beating the street. They came in at 1.5 million building permits, expected to be 1.33 million, so better than expected there. Something to note, besides somebody at my door, is that when we see these building permits increase, it's usually we wait and see what happens, because you can pull as many permits as you want. It doesn't necessarily mean you're going to start those houses. Well, we got the housing starts that came in at 1.5 million units as well, expected to be 123. So clearly these guys are pulling permits in order to build on them. They have the expectations that they are going to build on those right now. And we've talked about this so many times. The housing market is doing really well because interest rates are so low for the 30-year and the 15-year interest rate loans or mortgage loans. That's allowing more and more people to be able to buy. Now, we can talk about the banks being a little bit more stringent on who they're loaning to, but at the end of the day, there is not very much supply there. The builders are seeing that and taking advantage of it by ramping up that building because they see that demand there. So that is doing very well. The other side of the coin is with the stimulus checks. You know, I've talked about this for so long that when the government does some kind of stimulus for the economy to get it moving, you can't pigeonhole where it's going to go. You can't say, I'm going to give you cash for clunkers, and then everybody goes out and buys a car. That stagnates the economy. That is a waste of money. But what we're seeing in the current administration is that they're giving you and me, or anybody out there, some money, actually not necessarily you or me, but giving people money in order to go out there in the economy and spend it however they want. That's what's driving this overall economy right now. And we're seeing that in the retail sector. We're seeing Target, TJX didn't do so great, but Lowe's, Home Depot, those kinds of companies, Walmart, Target, I think I already mentioned, are doing very well because people are using that extra money to go out there and spend it how they want. A lot of homeowners are obviously going and spending that money at their home. They're also building backyards and pools and stuff like that for the stay at home. If you're going to be at home, you're trying to improve that environment you're around. So people are spending it completely different, which creates velocity of money. And that's exactly what we want to see at a time like this. And that's why we're seeing the quickest recession recovery we've ever seen in history. So the administration doing the right things on getting the money to the people in order to spend it in the way that they want, that creates the velocity money. Now, let's talk about today. We got crude oil inventories. It was a drawdown of 1.6 million barrels, expected to be a drawdown of almost 3 million barrels. So lower drawdown than expected. That means there is less demand at this time. We're still seeing crude oil hover at these 42-ish is where I've talked about being the sweet spot in this low 40 area right now. I mean, I would like to see it pull out back a little bit into the 30s, but at the end of the day, this seems like it is very receptive to this lower to mid 40s. I would not like to see this go up into the 50s and 60s like we saw earlier on. Gas at around $2 a gallon is good for the consumer at this point because, like I said, it's that whole thing. We don't want to see everybody spending all their money just on gasoline. We'd like to see them buying a cup of Starbucks, going out there and going to Target and maybe buying some back to school supplies with that excess money. So that's what we'd like to see right now. Something to keep your eye on later on today is the Fed minutes. The FOMC is going to be releasing their minutes. Now, I don't think that there's going to be anything in there that is going to be a market disruptor, but it is always good to see the insight of what these people are thinking. Why? Because it's really what's going to be driving the markets down the road, right? So we need to keep our eyes out for that. All right, so let's get on with the overall markets. We mentioned crude oil here. It is relatively unchanged right there at around $43 a barrel. Gold coming off today. This is the thorn in my side because yesterday, and you remember on Monday, I was talking about getting out of my GLD trade on this move higher. Well, yesterday I wasn't able to get out of it, obviously, because I couldn't get into the market. And then today missed the overall move. I'm staying with this trade, though. I do have a working order in there, and that is in my September. I'm short the 170 puts in GLD. I'm trying to work to get out of those, and we'll talk about that here in a little bit more. Actually, might as well talk about it now. I sold those for $1.30. Right now, it's trading around 75-ish. Let's call it. I'm trying to get out at 50 cents. So still working that order. Probably should have left in a GTC, hindsight being 2020, but I didn't know I was going to be out of work tomorrow or yesterday. So, I mean, I was trying to log in every so often, but was not able to get out. All right, VIX is unchanged on the day. We've got the Dow Jones Industrial Average up 58 points. Really, the retailers are driving this market. Tech sector is doing very well. As a matter of fact, we can talk about Apple here down the road. $2 trillion dollar mark. It is basically, if it were its own exchange, it would be the 10th largest exchange in market cap. That's how big that company is. E-mini S&P's up 5 points on the day, really starting to get a little bit tighter ranges than what we're been accustomed to for the last couple of months, where, you know, we were talking about at one point 1,000 points in the Dow Jones was the new 100. Well, we're kind of getting back to that reality of lower ranges because pretty much the information's out there. We're actually getting pretty decent economic data, better than earnings data, better than what's expected on the street, especially from these retailers, and that's really driving this overall market higher. But people are starting to get used to that a little bit at this point. So markets are calming down. As you can see here in the E-mini S&Ps, the volatility really falling out of bed there. Let's look at the breakdown of the E-mini S&Ps. This is a 30-minute candle. We're starting to see, like last week, we were seeing the value area, the point of controls, really lining up relatively tightly, or in line, I should say, having a bunch of inside days. Well, today we're starting to, or this week, I should say, we're seeing those value areas kind of overlap to the upside and the points of control stepping higher, which is acceptance of value as the time goes on of higher pricing for the indexes. And that's because we're seeing better than expected earnings. So we're kind of expecting to see this market continue to move a little bit higher here without any outside forces like shutting down of the economy again due to coronavirus. Here in Arizona, we're seeing the corona cases really slow down. They are talking about Florida reaching a milestone on deaths there, but at the end of the day, most states are seeing this pullback in the corona cases. All right, So GLD, this is what I was going to talk about at the end of the webinar. I already talked about it. We were talking about gold, but I'm still on the bullish side of GLD and silver. I'm going to be doing a webinar tomorrow on selling some puts. We're going to find some ideas out there where we have a bullish assumption in something, and we're going to talk about when is the right time to implement an option strategy around that given assumption for that underlying. So check that out. Go to protraderstrategies.com. I'll show you how to increase your probabilities of success with a strategy like that. Again, I am holding on to gold. With this market calming down, I think it's going to hold on to these levels, at least stay above this 161 Fibonacci extension, and that will allow me to really see some theta decay come out of this. Hopefully some volatility coming out as well. As you guys can see on that market rally, we started getting some volatility expansion. So that made it a little bit more difficult to get out of that trade on Monday when I talked about it. Yesterday, obviously, was the day to get out of that, but I wasn't able to get into the markets, which kind of stinks for me. So I'm still in that trade as of today. The other thing I wanted to talk about, just for talking about Apple, and because I mentioned it, is that Apple traded at 468.65. As you can see here is the high. 467.77, I believe, is the benchmark number for that $2 trillion valuation for Apple. As you can see, we did breach that for a moment, slightly below now at this point in time, but I don't think that it's really going to hold back on any type of rally here in Apple, especially with their earnings and the split that they're expecting here in a few weeks. That is kind of driving the market. A lot of times we will see those markets rally ahead of that split, and I think that's part of the catalyst here as well. All right, so that's all I've got for you guys so far today. Check out the protraderstrategies.com website. Also follow us on Facebook. We're throwing out a lot of content there, so you can get full access to some of these videos that I'm doing and some of our other partners at ProTrader Strategy are doing as well. So good content. Check it out. That's all I got for you guys, other than we do need to go over one thing. And I always forget this, but it is really important because we are an educational company. I'm not soliciting you guys to jump on board with any of these trades. I'm just trying to show you the right time, place to implement an option strategy using my my trades as examples. All right, so take a moment to go over this, and if you can't take that, take it easy.